Good morning, good morning, good morning, and welcome back to another episode on Coin King channel. I am down to Crypto TA, your host. I'm just in the background, just trying to work on a couple of things for you. Um, yeah, I got out of the market yesterday. As I stated, it's clear that we're going to make our way down there to a mark target, the one that I mentioned about 2 months ago. We're finally getting there. Hooray. No. All right, so I'm just trying to map a couple of things out to make sure I have everybody on point. Um, we'll jump over to the weekly time frame here and show you what I'm looking at. I was trying to get it set up here on this lower time frame also, but it looks like I will need to zoom out on this lower time frame. Just pop back over here when we start to get a little bit closer to it. All right, so I'll lock that in and hide that for just a second. All right, so here we have it right here. So this is what I've been mentioning right here. This EMA ribbon here. This is the one that Bitcoin came and back tested here. This was the first time it back tested it here. This was the second time it back tested it here, and you can see very clean with the touches here as well. So here, and then this one, this time here, this is the one that I have been highlighting on the chart for a little while here, stating that I could see something in the weekly time frame, higher time frame. I'm always looking for long positions on lower time frames, but as far as the weekly time frame goes, I was looking for this move right here to take place. And it's been several weeks now, about 2 months actually, if give or take just a week or something like that. That I was saying that price had the potential to come down here into this level and tap this EMA ribbon right here one more time. The idea here is for it to do what it did previously. That's the idea. Since all we have to work off of probabilities and not certainties, this would be the probability that price would come back and it would tap this moving average here once again, and we look for it to bounce away. I put on here also the 50 fib with the golden pocket fib. Now you can see that we have not come in and tapped onto the golden pocket. That hasn't been the case. I got it on here anyway, just because this time when we did the pull, when we got the correction down, we came a little bit further in. The first time we tapped the 50% retracement perfectly. This time we came in ever so slightly. So I'm leaving it here just for a little bit of deviation beyond where the golden pocket is sitting at and where the 50% retracement is sitting at. I also highlighted some liquidity that's sitting here at 98,200. So taking whatever liquidity over this below this pivot right here, this little small pivot right here, and tapping into this EMA right here and front running the golden pocket like the last time is what I'm looking for. So the setup that you see that I had on the chart here, which is this one, this is taken into account this liquidity here. From here is taken into account the tap of the EMA ribbon here. And it's also giving enough space that if price did push in a little bit more, I'm not looking for this stop to be hit. It doesn't mean that it can't be hit. I'm just looking for it not to be hit. So I gave a little bit of extra cushioning. That's at 62,637. So a little bit higher than the golden pocket low. Just slightly higher than the golden pocket low. You can do whatever you choose to do. If you feel, like you have room for those things, and you can do that. For me, this is already a 5% move from entry. So what I don't want to do is I don't want to supersede the 5%. Really don't want to do too much. 5% is a lot. Well, I'm looking at a weekly time frame as well. 2% is more reasonable on your stop, but 2% is going to be really, really close too. And I think that when this, let's see, with this one here, it did a 3.87% pass past that EMA ribbon. When it dropped to it, you can see how much it actually did. This one it didn't do. It didn't do that, but this one right here, it did deviate over it by 3.87%. So I'm factoring all of that in. Now you have also heard your large analysts, or your well-known analysts state that Bitcoin will never go to $100,000 again. You'll never see it below $100,000, which I talked about that in one of the lives that I did. That usually when you hear that, it's a magnet for price to come to that level, right? And they said it with the 74 or 70, whatever price it was, but it was in the 70s. It's constantly being thrown around, and when you hear that, for me, it just means price is going to be attracted to that level. So that looks like what we're heading for right now. So we haven't taken out the liquidity here, which is from the Binance low, but I do feel like price is going to be magnetized into here. So I've just been sitting on my hands, not doing anything, and just allowing the market to reach my level before I consider any new entries into Bitcoin. So if $100,000 is your thing, it is a psychological level. It would be front running the 50% retracement, which you can see previously. The last two times, at least, we came back and we tapped that level. So I don't really feel that it's wise to not consider the fact that we would drop below 100,000. But again, it is a psychological level, so I do also have that here as well. So I think that was this one here. Now this is the same thing. It is a 5% risk. But if you're using leverage, I would keep it very light. I've actually considered this first attempt here to be a light long. So that means that you don't go heavy on liquidity and you don't go heavy on position size. You just keep it small and be comfortable with small wins. So if it's a winner, just be good with a small win. And if the market decides and wants to push up higher, then it can turn into a larger win, but you're not risking a lot of capital on the trade, because at the end of the day, anything can happen and we don't know what's going to take place. So if you don't have it, then don't do it. Only risk the amount that you're willing to lose. So this entry right here is for the 100,000. You can see that over here. So just targeting that 100,000 psychological level, would stop above this golden pocket, assuming that we respect the golden pocket as we did previously. And this is all we would be looking for in here. The 50% hit, the momentum break that would take place as well. But we want to see it reclaimed, of course. The liquidity that sits here, that gets hit, and also the this EMA ribbon here. This EMA ribbon also gets hit in the process. So if you wanted to pull trigger early, you could do that. Now there is the options expiry. So they do want to get the prices down there towards the 100,000. Okay, with the options expiring on the 7th, they're looking for this to get hit. So I'm just going to spew this one more time. It doesn't make sense for these analysts to say, okay, we'll never come to $100,000 again. You'll never see Bitcoin below $100,000 again. It just doesn't make sense. It's irresponsible, actually, to say that. But we can say the probabilities or whatever. But to say it's you're never going to see it. It's ridiculous. All right, so yeah, with options expiring on the 7th, they would want to make sure that they get prices down here before then, and it's already the 4th. Okay, $100,000 is probably going to be like, I'm classifying that as, sorry, I want to see how I'm classifying that. I know I have it as a light long. I may also be classifying it as max pain. I just wanted to go back through my notes and see how I'm doing that. I know I have it labeled as the gamma buy wall. Um, for this option expiry. And let me see what else I put in my notes in here. Give me just a moment. Going through. I got so many notes in here. I was working on Bitcoin this morning, and I was also looking back at Meta because I mentioned yesterday about my entry in that, and the fact that I felt like they were going to try to get prices down below that at least to about 600 before the 7th, before those options expire, and that was going to be max pain, but the dark pool was sitting down a little bit lower, so I was trying to around 588, something like that. Dark pool orders would be sitting in there, so I was trying to work on that at the same time. So yeah, I do have 100K, not just labeled as the gamma buy wall, but also have it as max pain. So, and I put my action to be a light long on that. And then this 97.5 is what it is right now. You could either do that, or I have an option, not you. I'm sorry, I shouldn't say you because I don't give financial advice. I might consider it to be if I was doing the $100,000 target for Bitcoin. I could make that 97 a core ad, right? But what I can make it a core ad, so I can just add into that position from 100,000. But in that case that I did that, I would not adjust this stop. So it's either go with this, and I have this set for a 3-to-1. So I either go with this $100,000 entry in the event that they want to put a pause on price action right there, or this 97, and add if they fail to hold that level in there, the $100,000 level, and it drops in to test out this EMA like it did right here, then I could add onto that position, but leaving my stop where it is. In this case, that's an option right there. Or just wait and just, even if I don't get into it, then that's fine. I don't have to make the position. I really don't. I can always reassess and enter later, which would be the case if I decide I don't want to take a chance on the 100,000. I don't want to take a chance on that when I could see here we tap this EMA, and I can see here we tap this EMA. I'd rather just wait for price action to come into the EMA because I believe that that's the likely outcome, and just stick with this one right here. And just stick with this entry right here. And then I'm pushing for a little bit more on this one. So I'm actually looking above this wick right here. Now, in turn, again, if this is a low and we're going to look to go higher, I did also look at that too. So when I assess how high we went from this point here to this was the high wick right here. So I'm just going to go with that. So that's 123. We'll say 124% move to the upside following that. Then it starts to get lower, right? So we don't make the same range that we did before. So now it's come down. So we're looking at about 69% to the upside. So almost cutting this in half for me. So then if I'm looking at this, I just have the assumption, I'm just going to take it from the EMA ribbon right here. And I'm going to do something around about 30, we'll just say somewhere around 30. We'll do 31. That makes sense to me. Like just keeping it simple, not shooting for 200,000. Although I know that that's the buzzword right now, 200,000. We go from here and we bounce up to 200,000, which is something that could happen. But I'm keeping it lighthearted here. At max for me, 130. 130 is what I'm going to put to it. And this is just taking out this high right here. This would just be taking out this high if we repeat and keep this going. But since we didn't do as large of a move as we did here, I have to scale it back. I have to scale it back and just assume that we don't, that I'm not looking for 123% move. I can't say that I'd be looking for, even that's more than 123%. That's 100%. I can't say that I'm looking for this. If it gives it, then great. You're already in a position. You can leave a runner. You can leave some on the table if you think it's going to be a runner, but I can't see that personally. So I dial this back and I say, something like that. I have to cut this down almost in half. It's slightly better than that, but let's just say it was just coming back up here to back test this trend line, and it can retest it at any point along the way. This bottom trend line right here. That's how I'm assessing the market. If that's making sense to you, that's how I'm assessing it. And like I said, if it gives it, it gives it. But I'm not overshooting for something that may not be the case. It may not be the case. All right, and let's see what else we got going on in here with this. So I can I may not have put those notes in here. It doesn't look like I did because it would have been at the top anyway. Let me see. I have I'll come back and I'll upload it in a minute, but or let me just let's do it like this. All right, so we're looking at possibly an entry at 100,000. In fact, hold on. I need to spell right first, right? And my typing sucks. And my computer's wanting to freeze up on me in the middle of me trying to do stuff. I can't even move my mouse right now. Okay, thank you. So we're looking at an entry, maybe 100,000. All right, and then I'm not the best typer. And then this stop loss is at 95. And the target is going to be, I got the target at 115. And then the risk reward is going to be 3-1. So that's this one. So that's going to be that. And then the other option, we had another column out here. Let me just hide that for a sec so I don't get confused about seeing the numbers in here. And so this entry is 97, 508, 506. And the target is going to be 17. The coin king types so fast, and me, I struggle. I struggle. Stop loss and then risk reward. Alright, so this stop is going to be 92, 637, and it's about a 4-1. I can see what it read there, but I'm just gonna keep it simple without having to do the extra stuff. So I'll be looking at about a 4-1. All right. So if it loses, let's just say, if it loses, I can't say 100K. I can't say 100K and feel comfortable with just saying 100. Actually, I can. I suppose I can. Let me see what this number right here is. Should be just do it like that. That's 99,613. Because I just think that there's room. There's always room to go over a number. There's always room to go past a number. The way I want to word it is, okay, below $100,000. Flush the 97 is how I want to state it, but I'm already looking for it to go past 100,000, so I don't feel like it's going to make sense for me to say that in here. Turn that back on. I'm just gonna slide both of these out of the way. Like that. I will add a note in here though, just below here. And just state a light long right here. And then here, I'm gonna put do it like that. So I'm gonna say light long. If you were taking an entry off of 100,000, I would go light because I'm leaving room for the chance of back testing the CMA again, like here and like here. And if you failed like you wanted to, like, I don't know your situation, your money, whatever. If you felt like you wanted to add like 100,000, cool. I have plenty of room in here because a lot of people do add to their position. They leverage, they scale in, they scale into the position. So if you wanted to scale in at this point, then you could do a scale in option also. I wouldn't change the stop. I wouldn't change the stop. I believe the stop the same if you did the 100,000 and then you decide I want to scale in on this position. If we tap into here, and then I just take a loss if we're beyond whatever your point is. But I've identified what my stop is going to be, and it is going to be that 5%. All right, because I'm going to be light on my position. My leverage is going to be light as well, which is going to give me plenty of room. But one of these can happen. One of these. Let's not forget this moment right here. One of these can happen. So I just want to keep that in mind as I think about that stop loss, which is why I'm going to keep it like that. Personally, what I'm going to do is I'm going to sit on my hands and I'm going to wait on this one right here. And it's okay if I'm not getting in down here. If I see a reason why I need to change my mind, then I just change my mind late. And that's going to be okay. Or I move on to something else. I just move on to something else. All right. So this is the plan. This is the plan right here. $130, I would say is reasonable. Is a reasonable target. So this doesn't have to be it right here. I'm just making sure that I'm realistic in what I'm reaching for. I want to be realistic. So 130, 140, I say those targets are doable to the upside. 130, 140, doable. Just doing that again. I would say that's doable. Yeah, see, that's 34. That's half of this. That's doable. That's doable. This is half of this one over here, and this is half of this one over here. That's doable. So this can be extended up, but to just keep it realistic and say, I'm gonna leave a runner past this point. You just want to be able to make sure that we want to at least be getting a 3 to 1. At least be getting a 3 to 1 is what we want. If you're taking profit early, then you're going to end up getting less than the 3-to-1. You probably end up getting something like a 2-to-1 on this one. If you're locking in some profit ahead, you'll probably get like a 2-to-1 on this one. You'll probably get like a 3-to-1 on this one. And then if, like I said, but if this is a realistic target, then that can be extended. That can be extended, but you want to make sure you're locking in profit, not trying to wait until we get all the way up here to the actual TP. You want to make sure you lock something in. Okay. And then, yeah, 130, definitely reasonable. Say 140. A bit over what I'm looking for right here, but I wouldn't argue that that's not reasonable too. But definitely 130 just it sits in my head a lot. It's easier for me to understand price doing price being able to do that much is a lot easier for me to envision that than it is. It's a lot easier for me to envision this than it is for me to go beyond that. So, all right, so that's done. What we're looking at in here on chart where the candlesticks are, that's done. Okay, so let's just take that part away. We're done with that part. All right, let's see. I'm gonna put on QTD because this is something else that I'm also assessing. And let me turn this off. Let me see if there's anything in here that gives me pause for concern. And there is, and I'm going to talk on that in just a second here, but there is. I just want to see if there was, let me turn this one off right here for just, yeah, let me turn that off for a minute. I'm going to come back on that. I'm going to leave these two circles on here though, because you can already see what I'm looking at. All right. What are we looking like in here? Looks like a little slight. That's going to get okay, so before I move forward, okay, I am starting to see a little bit of something in here. All right. I was about to turn off the scale line right there. But let's do this. I'm gonna take away the drawing. We can see where we're at. All right, we can see where we're at. All right, so you can see how on this drop right here, what we do, we came in and we tested the top side of the cloud. Respect, we move away. So we already seen and that's the 60 EMA. For anybody who needs that number, that is the 60 EMA that I'm looking at, that we back tested here and here. All right, so we have the 60 EMA. We have the top side of the dynamic cloud right here. Just tapping into it ever so slightly. And here, same thing. And then I noticed down here at the lows down here, the scale does not tip, meaning it's not breaking through here. And you can also tell that because it's not firing off any signals on the low. No signals are firing off on the low, like over here. That only happens when it tips it like that. So it didn't do it here. It didn't do it here. The only thing in here I can see that's kind of off, and I don't know if you can see it, it's not flat. It's not flat. You can see this slight, I forgot that's gonna turn everything back on, but you can see this very slight right here, but really it's not flat. and I want to see it not looking like it's still trying to rise. Because what happens if it's still looking like it's elevating to me, we're going lower. It increases the probability. Let me put it like that. It increases the probabilities in my mind. That Bitcoin price will be going lower. If I'm looking at it like that, because in my mind, and I don't want that to make everything come back on again. In my mind, it's gonna do a curve the same way it did this curve to the downside, which is bullish. It can do a curve to the upside, which would be bearish. And I don't know if we've done that in here before. So we didn't do it in here before. Okay, so that's a good thing. It's never done. It's never done one of those, and it's not enough evidence here on the Binance chart. I would have to be on the index, but it's not enough evidence in here that it's done it before. So maybe I'm a little bit too far outreach on that. Apologize. Hey, really rich. How are you this morning? And you seen? I don't know if I'm pronouncing it right. I'm saying you seen. I think that's right. Zen is firing up. It's also privacy asset. Okay. See. Nasdaq almost clear the gap. Then everything will skyrocket. Look at the NQ, and then we'll get new all-time highs on BTC and more. Okay. Let's take a look at that. Right now, I'm going to get through this Bitcoin analysis before I start looking at anything else, because yeah, Bitcoin. Because in the crypto space, if this isn't doing well, then yeah, not too much more. It's not gonna be able to fight against it. It might be okay for a little while, but it won't last long. And so that is the other thing that I'm looking at. And so this right here, this is actually beyond the golden pocket, and that's assuming that this move that I'm looking for takes place this week. It could be different next week, but this week, if this is what we're achieving this week, and like I said, with options expiring on the 7th, and then I think we have options expiring again, probably like the 14th or 21st or something like that. But right now, I'm focused on the 7th. This could be our play right here. This could be our play right now. And so that's that part. I also looked at, I don't have it in here. I have it on this chart right here. I'm gonna set this to the weekly so we can see that too. Just to, and so I did note for that lower time frame, because I'm going to be reassessing everything on that lower time frame. Let me change this to a solid line, and then that way I don't confuse myself or you with price action right there. All right, so all right, so this is our volatility range. So everything is pointing to in here, but we can't really define. I have the probability. So if worst comes to worst, then I'll know. Let me just lock this in. So this trend line right here, as momentum shifted, did I not lock that? As momentum shifted and price continued to push higher, and this is how ribbons make a lot of sense, right? Because that's all they are. That's all trend lines are. It's a moving average is what a trend line is. So this is the same EMA ribbon that I'm watching. Let me turn it off for a minute. This is the same EMA ribbon that I'm watching. This is the weekly time frame. This is the same one where we back tested here, and it's here. So that's all the trend line is. It's basically the moving averages are just an easier way for you to assess where your trend is without having to draw trend lines all over the place. But that is what that is right here. Now there's no confluence here to this one. This is the 200 here. So 200 is all the way down here in the middle of nowhere. And I don't think that Bitcoin, there's not enough evidence on this chart. It was below it here. 2022, it was below it here, came up, back tested at 200, rejected, came back up again for another back test, another little rejection before finally breaking above it, coming back testing it. And I'll even consider this. So we'll just say it back tested it twice before it pushed up and away from it. So this is in the middle of nowhere, so it's not on my radar right now. It's on my radar in bear market. It's definitely on my radar in bear market. So that's what I'd be looking for in that case. But here, this is the same thing. So you're like, I don't like moving averages, blah 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 blah. You have to like a trend line, really, because they're part of the analysis. They are. So that would be this. That would be this back test right here that I'm saying that price is more likely to come back and test this. And we want to see it hold here. And I've given it some cushion for a slight deviation. And I flagged this as the top side of the cloud because that was another thing that Bitcoin price action was doing. It was at least tapping the top side of that cloud. Now this was slightly up above it, but that's how I know I'm coming into it, by doing that, by just putting this number in here on, by putting this making this notation in here on my golden pocket down here at the low. And the number right now on the cloud, which it's not going to move if, if this is going to happen this week. This is going to be the number 91,141.78. That's going to be the number. The other thing you're seeing right here, this is going to be your 20 SMA from your monthly time frame. That's what that blue line right here is that I highlighted with the X. That is your 20 SMA from your monthly time frame. This one right here, this is your standard deviation on your monthly time frame. So this is we're outside of where price was tending to range for Bitcoin. And you can see how we kept bouncing down here, wicking, and now we're below it again, But this is your volatility range. So everything in here is important. And then you have your 786. Now I'm going to change this number right here on this ribbon. I'm going to go with something else that I tend to use at times. and that's a 120. And the only reason why I started using 120 is because it's double on my 60. And I've noticed that a lot of stocks, they hit that 120 as well. So a lot of stocks tend to hit that 120 a lot. It's usually when they hit that 120, they're gapping away. So like right here, how Bitcoin hit it, and then we broke down. Like we lost the cloud here as well. So I tend to notice it during gap away situations on that 120. And like right here, you see the 120 and, boom. But so I'd be watching that 120 in relationship to this second trend line right here. If worse came to happen, right? If worse came to happen, if we were losing this, I would say bear market probably. I would say we'd probably be heading into the bear market. And then this would probably be my gap away right here for something like this to happen. And that's how I would view that. I don't have a reason, honestly, to want to use it in that case, other than, let me see. No, I wouldn't have a reason to use it. Well, I can't do that based on this chart right here anyway. I can't do it based on this one. What I will do though, is here. Yeah. It would just be putting us back into bear market territory right here. So I could say, yeah, that would be my starting point for more downside in here into this one, into this. And you can see this trend line right here marks the low of what I would be looking for if we were in the bear market. I would not be looking for price to go below this trend line here in a bear market, because it's usually just the bottom side of the cloud that of this for this indicator. That's typically it right there. And you can see right here how it did some sort of a little small indenture right here. But no other time have I seen that. Let me see. There was no other time that I saw that. I hope I put this in a way that I cannot find my mouse right now. Okay, there it is. It's stuck. Oh my gosh, like this is the wrong time for my computer to want to start getting stuck on me. Okay, so you can see I tend to use the index chart over Binance. You get more data from the index chart. It's just better. And you can see where we're about at. It's just the line bias is just the top side right there. And that's what this line right here is for. Right here. And I didn't put any rays over here. Let's just do that right here so we can see. And make sure I'm not cutting in between cutting through anything. Don't want to cut through numbers. through, sorry, don't want to cut through bodies, don't want to cut through candles, don't want to cut through wicks, period. Not in this case. And just more data with the same information running through here. Let me check this. I think I have to. 200 that. Yeah, I have to. I have to 120. Sorry, I have to 120 that. Otherwise, you get no information. Hold up. I'm sorry. Okay. All right, I'm losing my mind. I was losing my mind for a second. Like, what in the heck just happened here? Like, what in the heck just happened? I was losing my mind there for a second. I'm forgetting that I'm on the monthly time frame. Okay, right. So on the monthly, that second trend line in here, the one that you're seeing right here from the weekly time frame, were actually stop it. Oh, jeez, it's stuck. I have to come up back over here to this one. I was trying to focus on this right here. All right, so right in here, you can see with the cloud in here, and I was saying how this bottom trend line right here, this would be it for me in terms of bear market here. And just walking us back through. Now we did have some sort of a little bump in here, which is not common. It's not common because it's usually just wherever this bottom cloud is sitting at, that tends to be the it for it. But a lot of different stuff happened in here. This particular bear market right here. So it's not much, but still it happened. Let's see, it came down an extra 12%, which it doesn't tend to do. If I just take us back out, it's usually wherever this cloud is sitting at down in here, that's it. Like, I don't expect for price to push in, make any indents or anything like that. It just comes to it, and then that's it. It's never done it before. That's it. Wherever the low is, that's it. And that's how it works. Like, I know that we come back into this cloud. I know that much. I know that we come back into this lower cloud right here. And so I wouldn't be looking for this trend line right here to maybe even add that little extra in there, but I'll be looking for this trend line right here to be the one that holds, and that's from this candle right here to this one right here. I'll be looking for that to be the bear market low. That's what I'll be looking for, bear market low. But this first line right here, This is the one I'm looking at on the weekly time frame right here, and you can see it from the monthly chart testing it. We haven't even dropped down into this 10 right now, but that's the 10 is lined up with the top side of the body of this candle over here. So that's what we're seeing right here. I'm sorry, right here is the 10 is just lined up perfectly off of that monthly with the top side of the body of the from the line chart. So we want to see a wick get left behind there. And I know it takes time. But you'll see that there's no closure below this 10. I'm sorry, it's 26. No closure below this 26. And we want to see the same thing. No closure below this 26. Closure on the monthly below this 26 looks like this. It looks like that. No closure, closure. No closure, closure. No closure, no closure. Coming into it, wick, into this trend line, wick, into the 60 EMA, looking at it from the weekly time frame, it's the 60 EMA. No closure on this monthly. Closure below on this monthly. The behavior of Bitcoin has changed. I'm not going to compare it to this. I'm not comparing it to this right here. This is something different. This isn't some big major move to the upside. Like this was a huge major move to the upside. This is not. This is the start of an uptrend. This could be the end of an uptrend, which is why I'm saying no closures below here. A wick, and then we look for that next little leg up. And again, I cannot assume 200,000. I can't assume 150,000. Hell, I'm barely assuming 140. Okay, I'm saying 130 because each time we got to move up, it became less and less. And we know we have the bear div. So that's 1, 2. Hold on, was it 2? Dang, we already done 3 drives. 1, 2, 3. I'm almost inclined to just not pay attention to this one and just say that it's been 2 drives of bear divs. I'd be lying to you. I would be lying. It's usually 3 drives of bearish divergence. Yeah. It is 3. I don't have an excuse for it. I don't have an excuse. Three is common. 4 not common. I'm like a kid who just, was eating some cookies and, your parents getting on to you and you're like, I didn't have it, and you got it all on your face. Cookies all over your face. It's what I'm feeling like in this moment right here. Maybe the next pump happens and it doesn't have a bear div. I know we're gonna get a pump. I know that. And I hate to sound like I'm certain about it, but I do expect us to get a pump. But that is three. That is the three drops. So there it is on the chart. And I can't get my way out of that one. So I'm just going to go back to this no closure below uh, this this 26. No closures below this 26. All right. And what I did say to you was that that was that blue line that I put out there, and I'm looking at it from the Bollinger, which is a critical factor to what I'm showing in here is me looking at it from the Bollinger. Okay, we have a wide span, and you can also see down here where the deviation is in terms of your bear market low. You can also see down here where your two is sitting at, just like in here. This is one, one, one. This was a harsh bear market. It had to be. First time it hit two. First time it hit two. Hmm. That's that 20. So if we're coming in and we're not, at some point, I'm not saying that it's going to happen with this move right here. I don't think it's going to happen with this move right here. I think we bounce away on this move right here. But at some point, when we do come in, and it won't be right in here, likely will be somewhere down the line, somewhere over here. All of this is going to start to change. It could push this back up here towards this trend line right here, and that'll be the thing. That'll be like, okay, now this is dead. Now this is dead. And maybe bear market lows by that time can change. They can change, but at the moment, this is it right here. But this is the 20 here. There's been no interaction with this 20. None. None whatsoever. So if we're testing this 20, then likely we're coming into our bear market. Probably like over here. Because there was no testing. There's been 0 times that price has come in and hit this 20, and this 20 is down there around where we have the 786. So we did too much. That's why I don't even have it on that chart over there, because we're doing too much if we're doing that. Because there's no reason to be near it. There just isn't. No reason. We don't have a reason to be at the 20. Or at the 786, or at that second trend line down there. No reason for us to be at that. So that's the critical stuff to keep on your radar. This is what we're looking at right here, right now. It's just that for our bounce away. this is what I'm waiting on today. Well, not it doesn't necessarily have to be today, but definitely this week. That's what I'm waiting on. Maybe, like I said before, the 7th gets here, and today is the 4th. All right, I'm going to zoom back out a little bit. I can see we do have some sort of action happening. And you can also see the volume too. That was the other thing. I just kind of sidetracked a minute there, but you can also see the volume as price is dropping. Volume is also declining here on this weekly time frame. Weekly volume could change somewhat as it progresses, but you can see through here too that this was capitulation, or the point of capitulation, right in here with that high volume spike right there. The other and just looking back, volume is petty. Get that out of here. I suppose I could have had that in here, right? Let me just put that over here on this chart also. Some Binance Wick. All right. Somebody was see. Somebody asked about something. Yeah, that's totally done. Totally. It's fun while it lasted. We'll leave this in here as potential resistance, which it did. Don't need that anymore. Drop that. Just that. Let's see. We're in this one. And this was just from apparently I'm looking past the target right here, of course, but this from yesterday when we were looking at it, just me taking a measured move from here and dropping it into here to say that, this could be one measured move. And then this one, of course, goes beyond that trend line that I'm looking at and the bounce away zone that I'm looking at, which is around that 100,097, 97 and a half, we'll just say 97 and a half target. So this is much lower, and this is again just drawn from this width from this top here down to the width of this low here, and that just gives that measure move right there. May not absolutely be perfect, so it's close enough. I know yesterday I said maybe a bounce away in here, some sort of bullish divergence on the 4 hour time frame. The bounce away was very petty, and I saw on the sideline, so we ended up treating that trend line like a rejection. So now this bottom side here, this as a rejection zone. I'm going to, I don't need that anymore, and I think this is out of the picture now too. So actually, I'm just going to hide this just in case I need to come back and look at the trend line for any reason. But right now, yeah, it's just the back test of both of these lines through here so far. So continuation down. Let's see, 94. I just want to see something. This comes back up for me. Okay. So that's the golden pocket. And the golden pocket is where I'm saying I'm not looking for price to come back to, but I did set that stop if you were somebody who was taking the 97 what we have it as. Let me get this off of here. Let me see which one I used on this. I want to make sure. Okay, so that's a done deal because we did push that to a 240, so that's extended beyond the 200. That's done. That's done. Like I don't. Yeah. Yeah, that's not even a 200. It's a 240. So take that away. We bounced off of that low yesterday. Didn't give much. We're definitely hitting our target. Maybe today is a good day for it. I'm just gonna extend. Not because I think it's gonna make a difference, but just extend that out. Leave those on there. I don't need to take those away. Mm. And so you can see what a 5% looks like because it is a lot. You don't know, which is why I'm saying keep it light, keep it light. We'll sink it. Actually, it's too far over here. Something like that. And I gotta go back and fix all of this mess. As you can see, I have the stop loss. Actually, I don't even have to do that. I don't have to sync this. I can just use this chart right here, right? I just want it to, yeah. I have the stop loss down below that, just slightly up above the 92,600 because that stop is 92,637. So it's just slightly up above this because I'm really not anticipating that that would be the case for that. That scenario. Let me see something else here. Yeah, because this at no point did this, which is cool. At no point did that happen. At no point did that happen, and I would have been looking at this. At no point did that happen. I'm gonna say at no point does it happen here either. It's three double tops. Yeah. I say at no point does it happen here either. But this one covers this measured move. This one does not. If you're doing this right here, I mean, whatever you choose to do on your stop, that's going to be your business. It's just an idea. It's just an idea how I think things could go. Probably got some bullish divergence on this right here. We do on volume. I'm still sitting out right now. That's some nice bull divs down through here. This entire portion right here. It's freezing. I guess I got too many programs running in the background. I was working on some flashcards. That's what I was working on. So it's freezing. Yeah. It's still stuck. It's going to be a rough day. I'm going to take a look at Ethereum, and I'm going to take a look at Solana. I think I'm going to cut it right there. I'm going to take a look at Meta too, because Meta's been something that I've been talking about. So I'm going to take a look at the Meta also. So nice bull div down through here on this 15-minute, 1 hour time frame. 1 hour bullish divergence. Okay. You do have bear divs coming up. It'll be the same thing like I said to you yesterday. You got bear divs on volatility coming up, which, and this happened way too fast, especially seeing the outcome. Just seeing how everything else is stationed. Yeah, it came up way too fast. Way too fast. So it'll be like this right here. You see the bull div through here? It'll be just like that. So bull div through there, bull div through here also. It's right. It's faster than price action at the moment. So even though we see the bullish divergence down here, I'm saying bear div. I'm sorry, bear div. You see the bear divs on volatility. We're rising fast. Which typically means it needs a mean. It needs to flip the mean, which is going to be the 20 SMA. It needs to flip that. And we're still underneath 50 in here. So we're staying neutral to weakness is all we're doing at the moment. If I can get my cursor to move. I'm so sorry. I don't know which program it is or what it is that's halting me. In fact, let me just close out. I'm going to close some things out and see if that, I can't even close stuff out good. That's sad. Let's have the right end notes. I'm going to close that one out. Close that out. Close out that one. See if any of this helps. See if there's any other one in here that I can justify closing out. Probably not. Okay. Let me see what this looks like on a 4-hour. Because we talked about potential bullish divergence in here yesterday, which price seems to have gotten, but it's not playing out yet. So we are expecting we got the bull dips in here on the 4-hour as well. Yesterday I stated it was rising too fast. It was already pushing up in here. So that was going to be a no-go. Do got bull dips on volatility as well in here. But you can see the bear div, which we can't overlook. When we get sharp declines, first thing you should be checking for is your bearish divergence, not your bullish. So you can see the bear div right here. Bear div. You can see it right here. Bear div. So if you're dropping fast and you see bullish divs, check your bear divs before you get overhyped and think we're just huge reversal. One is coming for sure, but we're getting bear divs right now. Bears are in control. And not enough capital is stepping in at the moment, and not enough momentum to shake out the bears at the moment. So, yeah. Bear div. Bear div. This is something you're going to look at on a mean reversion. You can take scalps above 40. You can take scalps above 40, like over here. Scalp up. But it requires a little bit more. 4 hours probably not going to be our friend either. Let me see. Let's see, 8 hour. Some more reasonable time frame. 8 hour. Even more reasonable to zoom out to one of these time frames so you're not getting caught up on lackluster moves. So no bullish divergence over here right now. That was the last. Did that even do it? Yeah, that was the last bull div right there. Head and shoulder. Head and shoulder. Sometimes I don't see it in here, and I'll see it in here faster. Don't know why. No, we did look at that yesterday. I take that back. We did look at this head and shoulder yesterday. Looked at it off of the 4 hour time frame, and it came in. It didn't come in as low as this right here. It came in a little shorter. I think it was somewhere right about in here. I think that's what it was. I looked at it yesterday. Cause let's see, I did this and then drew this out. And I remember saying my line was a little bit crooked. And I did it like that. Yeah, that was correct. It came in, look at that, 97.8. 97.8. I knew it came in shorter than this one. On the head and shoulder. I'm just going where we first broke below at. Everybody will do it different if you prefer how it looks now. I mean, let's just say it wicked up from here. I think I can push that up a little bit more. Now that, it wasn't even me trying to put it on this line. I promise you, I ain't even try that. I just tried to make sure that this point right here was backed into this line right here. And that hits it right there. I mean, everything points to this area, right in here. Right in here. But if we can do it without this, that'll be great. That'll make the risk to reward a lot better on taking a long entry. If that's going to be max pain, if that's going to be where I have identified, big money stepping in. Yeah. And below, again, below what I'm looking at over here, puts to be stepping in. Okay, so they will pile on. They're going to pile on with these shorts. Okay, they're going to pile in with it. I'm just going to scoop this back so it's not on the candle. All right, I'm going to take a look at Ethereum here. All right, so we were looking at this yesterday. This ascending trend line right here for Ethereum. I applied this yesterday using the line bias and then extending the parallel channel out to catch the lowest wick point, which was this one right here. And so you can see we're just slightly below that at the moment. Just slightly below it at the moment, but it was done based off the line bias with the parallel channel pull to the lowest wick. So it's another way of just drawing out your trend lines, or you can just stick with the classic. The classic, as long as you're not cutting through anything. Not in this case, you don't want to cut through anything. And then we just say it's already gone. Yeah, we cut through that one, it's already broken. course. This gives it a little bit of extra cushioning for your psychology in here. This whole range right here is a volatility range. This entire thing right here, which, that would suggest that Ethereum has the potential to come back down here. Hard reality, hard pill to swallow, but that's what it insinuates. Not saying that that's going to be the case right now, but that is definitely what it insinuates. If we want, we can look at. So I think that we were holding up on. I think a 60. We might have been holding up on a 60 or something like that. No, we're holding up on a 26. Make sure that's what I have plugged in. Yeah. So we're holding up on this 26 right here for Ethereum. It'd be the same case that I was looking at for Solana. This was going to be one right here at 32.64 and then 29.09. Because when I drew the fib on it, make sure I don't still have it in here so I don't have to keep adding. I do have it. Okay. I drew the fib from the high to the low. From the low to the high. Sorry. Fib from the low to the high. Let me just put it right here so you can see that that is the case using the magnet. So there's nothing off. This is just a 382, which was what Bitcoin was bouncing off initially. It was bouncing around this 382 Fibonacci retracement level, which is a shallow, and 50% down is right here. Well, we also have the 60 sitting here, and then the golden pocket is here, where the 200. Let me make sure I have that as 200. I don't have it as 120. So I have the 120 in here. I think when I did the 200, we might have been lower towards that 786 or something. No, it is perfect. So I can just leave that as is right here. So that would make plenty of sense. And then I thought that I had, what do I have in here? I have a table, but do I have any notes? I don't see it. 34, 960, support 27. I put some notes in here a while back, apparently, just on some levels that price had held. I'm going to extend this up for a minute just to see on that. So if we were talking, let me see which one was better. 31.98. 31.69. I think I'd rather go with the latter, the lowest, which would be the 50, instead of pushing it up and well, actually that would be the lowest. Yeah, this would be the lowest right here. I'm just looking at how I would have drawn this before now, and it would have had a high and a low touch point, and it would have been both of what I'm already looking at right now, which would have been that 50, and then it looks like it would have been this right here, but we can't do that. So I would put these two together like that, give a little bit of a deviation in here. And then that could be your target one. I thought me closing out all of my programs was going to help. Thank you. It's frozen again. And I'm just looking at how we weren't managing the close below right here. You see all these doji candles in here, how the price kept failing to close in here until it finally did. So I'm going to add that factor in right here. So if you're somebody who's patient, you'll probably be looking for a break first and then a reclaim to make sure that this area is going to be a good one and that it's not going to just fall through. Or if you're impulsive, you'll want to stop out right here, limit order in, and then stop out right here. But patience can be good on Ethereum. And just so you can see it again, just kind of like what I'm looking at in here on this. It seems to have wanted to maintain through here. Something I don't usually look at. I'm going to take a look at it now, though. I don't usually look at it. And I can't recall if I took the 32 off on the other chart, but I'll tend to leave it in there just in case price comes back, especially if you have like lows in here. You can use that as a place that might see a rejection or something like that. Flip it, great. Back on rejection, then probably continuation down. Let's just take a look at VRBP. I guess that would be revelation to my first point, which is this is your volatility range. That's what I was talking about yesterday. Like this right here was a deviation. This was a deviation. and not a breakout, but a deviation. And so you come back into your range, and this is your range high, and then this is your range low. And yeah, probably if I look at it on a monthly chart, it probably would. It could match up to this. I'm gonna go over there and take a look at it just to see. But this low right here, back down in here, you can see how that node actually runs clean across here to validate this trend line right here. As potentially a target area for price action. I think that would be more like bear market stuff, than anything. Bear market stuff. We'll check that out. All right, and let's just drag this over. So that's okay. Turn this off. Candles. So I'm checking out this. I'm checking out this. This right here. This is a deviation over right here. Checking out this. So I think great the way I have this modified. I think that's pretty good. Yeah, that's pretty good. I mean, that's just based on price action alone. Now I'm just trying to see what that looks like with something else. This one. Yeah. Yeah. Now if I take out which is not necessary that it captures the moving average that's in here as well. Price can front run sometimes, but let me change this so I can modify the low, because otherwise I wouldn't want to. Do it like that. And then for me, I would take into account this, which also takes into account the momentum line. I was looking at that initially, but I was like, I don't want to be too close to where this is. So that would be on par for me. I like that. I like that. I like this part in here. I like that in there. So that's on par for me for Ethereum. These can mean a lot. And there really is no additional momentum breaks in here outside of this one right here, this horizontal momentum break. This is the diagonal. This is the horizontal one right here. Let's see what switched up for us in here. like this. But I'm going to keep this like I did it because I don't think that like I just did it. I'm going to keep it like that. Yeah, I'll keep it like that. That's this liquidity. That's what that is. That liquidity. And the only thing I could think of that, and make sure I didn't move this, else I could tilt it slightly, is to grab on that liquidity, drop, and bounce away. That could be the thing. Uh-oh. Had my finger on that shift key. Got another little node right there. And then the one that's down here at this one. So maybe if you bank on that, this is your VRVP. If you squeezing this in, it would be right there. I don't turn that on too much. Point of control, I don't really turn it on. It's not, I don't really use volume profile. But that is, and that's just looking at it from this perspective. That looks like a good spot. That was also what we had at 200. So golden pocket 200. Let me make sure that's the 200. I'll have something else typed in here. Yep, that's 200. And let's just add some notes in here. I don't need that one. Delete that table. Okay. So we got liquidity. Liquidity there. We got a 60 EMA. And that EMA number is gonna tip around a little bit. So I guess it helps me to type the right number in here, right? I told you my typing is terrible. It's terrible. It's terrible. I'm just gonna do 64. Just keep it evened out. I'm being particular by just adding those 2 0 decimal places on the end. Um, 0.50 fib. Want nobody be typing this long. I'm telling you, I cannot type. And I can barely see, so I need to put my glasses on. Not like you can see me with my glasses on. Alright, so that's this one. That's the first zone right here. And I add another note in here, maybe like an inch. I add another note in here. We'll just discuss it maybe a little later. You can type something up. All right. So in here we have Golden Pocket. So we have GP. I don't know if I need to put both numbers in here, but I'll put it in case somebody. Coin King, I'm gonna need for you to start typing for me. I look crazy as heck sitting up here trying to type. And we have the 200. I'm putting the ats. See? We have a 200 week EMA. Oh my gosh. You can see I pre-prep, and when I put notes in, it takes me a while. And I have to pre-prep. I have to get some assistance. And then we got POC, right? POC. Let me just turn that on so I can. POC is going to be it's basically where the low on that low on the pocket is. It's basically what that is. That's what 2. Yeah. So it's just slightly below that. Let me turn that line on. Above me. Alright, so we got that. We got this. We got this. So we got some nice probabilities right here on Ethereum. What's Bitcoin at right now? 104. Let me just check that out. If it'll let me click on something else. Just wanted to see what we were looking like. Bitcoin. So basically on Bitcoin, we're still holding the low from that 4, unless something over here is an update. And we're still holding the low from that 4-hour zone yesterday that we talked about. The first point, I think I just looked at it, but it's still below. Still a change of behavior on the daily time frame. So this would do it right here for Ethereum. The liquidity that's sitting right here along this bottom point right here. The 60-week EMA also sitting right here, which could be a bounce factor. And you see the spread right here. It's a nice spread. It may not make a difference in certain cases. It may not, which is why we're looking at also the zone below it. But there's a nice little spread right here. And it doesn't look like there'll be any intent of crossing right here either. Not at the moment, anyway. and then the 50% retracement right here. And then you can see there is a little node right in here too, where the which isn't in the notes, but it's here, which is also right here. So maybe a liquidity grab, maybe a smack into the 50, possible. So it could be. I mean, if you wanted to see, I just like that. So let's just say it's taking the liquidity from here and it smacks into here. I think I may. Will you stop it? Jeez. That's really tight. That's a really tight stop loss. It's a little bit too tight for my comfort. Be waiting on the reaction anyway, but it does just buffer you. Will you not do that? All right, hold on. Really didn't need to hide that. I really just need to turn this dang on magnet off. It's always good to wait on the reaction. So just throwing that out there. You want to be aggressive, but it's always good to wait on the reaction. But that's not bad right there. It's not bad. And then just zoom out to a lower time frame. Or maybe preferably it leaves a longer wick behind and it just taps into here, and then that way you can expand the stop loss on this, and it'll just feel a lot safer. For me personally, that's how I would do it. I don't usually trade volume profile. I just don't. I don't. It's not the thing for me. I just determine my zones differently. So if I'm here looking at this is my weekly level already right here. It just so happens to look familiar to this, but it's not. And you can see how this one is up above here in this gap. So it happens to look familiar to it. It's not familiar to it at all. It is different. So this is how I do mine, which is a smart attack to let it break and reclaim. Most of the times it will hold in here, but to just let it break and reclaim, just based on my weekly levels alone. You can see how those work out if I'm not using that. Point of control would be something different. Maybe you want to just set it in here. Or maybe you want to shoot for the low. You can break it. You can break the point of control too. But point of control was somewhere here. I'm going to just set it down right there. Looking forward to break below. This is my low right here, but that's a lot. I don't want it to be that much. I don't know why. I just feel like personally I would set it like that. Personally, I just feel like I would set it like that and not have the fear of my stop being hit. But we'll go with wherever that point of control is. This is just a rough draft. I'm gonna have to give this a little bit more though. No, not 5 or something like that. I probably would just shoot back up here, to be honest, because I don't know how prepared we are to what was that, 3-7. I don't know how prepared we are to actually turn this magnet back on. I'm gonna hit the lows. You know you're gonna hit the lows whenever it stops freezing. You know you're gonna hit the lows, which is a better risk to reward. You got the notes. You can decide for yourself what that looks like for you. My weekly level says somewhere in here. Hold on. Let me just take off some noise for a second. Just so I can extend these out. I haven't even turned these on here recently on Ethereum. But these are my levels right here. And that's the one we just left. That's the one we're coming into. We'll be looking for that to take place. I think I had been working off of, no, that's something different. Yeah, we definitely broke down from that. That's old. That's old. We came back up. We hit, rejected, and now we're breaking the low. Yeah, that's old. That's old. I think we covered this yesterday. Our deviation, and I just talked about it again. I know that. So a deviation above this line right here, this is all coming from the monthly right here. So the deviation above here. So we would go with that first one. That first one for sure. Yeah, we'll go with this one. This one for sure. For the bounce away. And however you choose to set it, I feel inclined to bring this in to at least say the 50 gets hit, sweep the liquidity below, leave one of these nice little modest wicks on it, something like that. And then that also buffers the stop it, computer. That also gives a buffer to the average price move, which is what WAR stands for, weekly average range. So that's the average move of price. So that gives a buffer in for that too. And that's all sitting right here. So I say the liquidity is taken off of that weekly average right here. liquidity taken off of that. I wouldn't expect for it to hold even though we're in it, especially when we have a field level that's sitting below, and we have that large node that's coming through here as well. The second largest node, if, if you zoom in on it. So I can't move it. I will wait for the reaction by zooming in on a lower time frame, and then making my decision accordingly for what for anywhere below that liquidity into this zone right here, into this is what I would be looking at. Base my decision of getting in to the market around this below here, below here, below here. I base my decision around everything I can see in here that gives me high confluence. Everything in here. This is coming from a monthly time frame that adds to this area right here for me. Got the weekly average range low, got a momentum line through here, which if you've been watching the channel for a while, you see how we react around these momentum lines right here and what they represent and how important they are, whether you're holding above them or whether you're breaking down below them. In the case like over here, a break of the momentum over here, not able to actually flip it, because this is when bulls stepped back in, bears dominated that move that bulls had put in right here. This is where bulls stepped in right here. So we want to make sure that bulls are defending this right here. They made an emphasis of finding strength from this point. They made an emphasis of that. So that's important right here. So everything that's in here that says I want to react to price being below here. I want to see that liquidity get taken. I want to react to price action below that line right there. And so that'll be anything in here for my entry to get long on Ethereum. Cut it, and then your next point of interest would be in here. It's a couple of $1,000. I'm just waiting on this to, okay, let me cut that off, take the noise out. The higher time frame gives us more clarity. This is our range that we've been in. So we've been coiling within this range right here. And you can see it's the same momentum here on the monthly time frame that we were just looking at on the weekly time frame. So that's double. That's another one right there. So same momentum right here. Let me just slide that out. I'm just going to slide it out of the way so we can see. And that's also the bottom side of our range that we have been coiling in. This is the month 3. This is November now. So this is us coiling this out, this range, after we put in this mother bar right here. We've been coiling it here. Measure move is bear market low, it looks like down here. So that's going beyond this momentum line right here. That also happens to match up right here. And that's bear market lows. Bear market lows 2022. Bear market lows will be in here. This isn't something that I'm looking for us to do right away. I mean, we can do a candle like this. We can do a candle like this. It's not something that I'm leaning towards, but it is something that could for sure happen, right? So looking to defend in here. What that golden pocket is for now. That's why my take profits were not all the way up here. They weren't all the way up here. But we've seen this plenty of times in here too, where we build a range, we take the liquidity, which again is right here at this low right here. We can sweep the liquidity through here off of this range that we've been in. So that's nice. That's nice liquidity that they would sweep if they want to fuel prices back up. And we work with ranges all the time here on this channel. I work with ranges all the time. They're very important. Very important ranges. Generally, you sweep and then you go for your real side, but I'm not going to set a TP up there. Keep it modest and then leave room for a runner in case something like that happens. But at least that way your expectations are good. You know, you're not overshooting and wondering why you're not getting there. And then when you overshoot too, you get scared of taking profit. Take some profit if you're in it for sure. So in here with our range, and if we're not doing good with our range, we start closing below here, then we might, you know, still would get a bounce, but I probably would then start to look at this maybe you know, back into here, maybe back into here or something like that. Could be, and it could be. I think that this over here looks pretty good. I think when we were last looking at this, and just so we're clear on, it's not a lot of data, but you can see from where it starts. This is where you pull, you gravitate back down towards it. You gravitate back to this right here at some point. What we were looking at, let me turn it. Shit. That's me. All right. So there's a 20 SMA right here. This is something that we were talking about back then. I said to you, the way that the Bollinger Bands look, it's not a setup for Ethereum to hit those $10,000 targets that everybody's talking about. I said we could break it, sure, we can break it and leave a wick on it, but it's not. It doesn't have. It's just a look that you get used to seeing. You know, when you use an indicator enough, you just kind of identify it with your eyes. You don't really know how to explain. It's like cooking. You don't have to measure stuff. You just sprinkle the right amount of everything in there, and it comes out delicious. That's just how I am with this right here too. It's not positioned in a way that I would be looking for Solana prices to do this right here is what I was saying. Like, this is different. You come from a squeeze, you do it. When you come back in following a squeeze, chances are it starts to act as resistance on you. You start breaking it, but you don't actually make any what's the word I was just thinking of. It doesn't hold. Let me just simplify that. It's nothing long term. And then take a look at the 3 month. Again, this is what we were talking about. I took us over here on the 3 month. I said, look at this in this light as well. So you see that 20 on the 3 month. It's right here. Right here. We have multiple momentum pop outs down here as well. But here we are here on the 3 month right here. This is probably like one of this 2022 was, no, this is 2025. Oh, good Lord. You broke it like that? That was a good buy then, because all of this was turned up. That was a good buy down here. It's like, this is a good short. We talked about it. I said, look, the Bollingers, this doesn't suggest This doesn't suggest if you come from a squeeze, okay, you can see big squeeze was down in here. Big squeeze, push up, holding outside of standard deviation too. There's no squeeze in here. You come back in, your bands might stay up like this. You'll come back and you'll retest them, you'll retest them, you'll retest them, but you're also going to have all of this space in here to drop. So it's not like something where you're just looking for this to just, yeah, yeah, your range, especially in crypto, man, especially in crypto. So Ethereum did really good right here where it came up and it came back down and it hit this 20 SMA to hold it. That's usually the sweet spot. It's usually that's usually the sweet spot. Let me see. Yeah. So that's usually a sweet spot for you, just like that. And then you can see how it turned up. I really hate when it does that. When it deviates from the line like this, that usually means you break below. It means you break below it. Instead, let me see. I'm just making sure I didn't need to. I feel like I'm cutting through something like this. I don't want to cut through anything. I'm going to put it on that one. Same energy. Same energy. Yeah, usually when you deviate away from it, it does, and that'll take us back over to Bitcoin, but I'm not going to do that. That does tend to be an indication of breaking down below it. The momentum did shift a little bit in here, so yeah, that could be that. That could be what that signifies. Full transparency could be what it signifies. But for now, that's what we're going with. And I say we. That's what I'm going with for now. But yeah, I said we will wick it. We'll leave a wick behind, but we're not prepared to hit no 10,000 or nothing like that. It's just it doesn't give that sort of energy. It doesn't give that kind of energy. That's not what this is. That's not what this no, that's not what this is over here. Sadly, I'm just gonna take this away. Let's just do this. We'll never forget. Just run it like that. That still looks bad. That still looks dangerous, right? Even if I did it like that. It still looks dangerous. So this was us line chart. Bam, bam, deviation. Come back down, back tested this one from the line chart right there, and breaking back in. And so this is the line chart right here. So tap, tap. That's barely a hold right there. It's just not. But nice momentum break back up above it. Let's see. Something to play around with later on my time off. Probably need to change the colors on it to make it easier to understand too. Just with the line stuff. It's gonna hide that. I'm gonna come back in and look at that later. But that was the thing for the monthly. The monthly, it just didn't look like Ethereum was gonna do that. But either way it goes, we're looking at these two levels right here with the take of that liquidity right there. It doesn't take the liquidity, maybe it just hold there. 33, 50, 54. Where did my notes go to? Oh, I turned them off. No, I didn't. I will add the other notes on here when I go to post this after the stream. The stream ends. So that's what we're gonna look at on Ethereum, and then Solana. I hope this didn't mess it up. It's reloading on Solana. So it did probably, yeah. I got all my NASDAQ. All my NASDAQ stuff is in here. Let me get us up to date. This is going to be all kinds of wrong in terms of this chart. So bear with me, please. Bear with me, please. Okay, so Solana isn't the daily time frame. We looked at the trend line again here yesterday. So trend line, let me turn this off. We're underneath the cloud. We know that. Somebody asked about it the other day, talked about that. Let me turn down. Yeah. So we got our range in here. We've already broken below our range in here on Solana. Range target is down here in this block right here. So it's like two ranges in here, which is why I have this dashed out, just so I didn't have to drop another line in here to clutter the chart. So there's another one right in here, right below where this measure move would be. I think that this was bear market lows in here for a good old soul. But yeah, I know that on the, and this is a common area for Solana to come back into. It's typically this one right here. So you can see that across here, or the 119. It's very typical for Sol to come back in and visit that 119. We know it's bearish, so I can take that away. And probably if I'm gonna put it on the weekly time frame though, it's gonna be easier to see since it is a higher time frame sell off. But you can see across here, either 129 or 119. This is going to be where your lows probably likely sit at here for Solana. So here on the, I don't want to do that. Move out to the weekly chart here. So we talked about, I shared this parallel right here. It actually would have been like a rising wedge that had an overshoot on it. So it had a deviation on it. And then, yeah, right here, you can see your bodies tend to be that 129. Your wicks tend to be that 119 or so for Solana. And we've already broken trend just like we did with Ethereum. Don't need that. So get rid of that. And we know that we were looking at the EMA ribbons in here. We broke clean through that 60. Clean through the 60. So it didn't even, at least not on the weekly, whatever it did on the lower time frame is it doesn't really matter. We broke clean through it because I was looking at that like I might get interested right there. And so, which I haven't been interested in crypto, period. We're still rejecting on Bitcoin, trust me. Now let me just make sure that input is 2, and it is. It's rough, so it's rough. See it on a monthly. That's the next momentum. Momentum trend line. If this is all in a month, kind of like how large that candle is, or how large that one is, or how large that one is, something like that. And that would pair up pretty good with the 129, 119. Just trying to see how much this shifted for me doing it like that. I actually gave it a little bit more space. I'm gonna do it like that. Let's do it in the morning. I mean, that's what I would say too. So I would say 129 or 119 just to, keep it simple over here on Solana. You can see all the way down here around the 90, which it only did that one time. And that was here where it came back in and it tested that $90 range. You can see the 60 is sitting down here at that low. But very likely that it's coming back in here to test in that. You're really not going to pull much from there. That's 108. That's cutting straight through the center to where that that line, the dash line, is the midpoint here. Just like I said, there's another range that's in there, and I just dashed it out to keep it simple. There's another range in there. We've already tipped below this one. I think that this is more so bear market, but let me just check again on that. Turn that off. Yeah, so that's bear market. It's coming into what I would identify as bear market lows. So we wouldn't want to see it take out this low right here. If anything, we want to see, like I said, that 119 somewhere within there to be your defensive level. I mean, even if it breaks this trend line, maybe it's just taking liquidity over this trend line or something like that. But this low right here should not be a thing. This low. That is the low right here. That should not be the thing. So as price does gravitate back into here, and it's not as wide as it was over here either, which is a good thing, because when it's wide like that, like, you can go forever and ever and ever. It did thin out. What that range will look like, it thinned out, so that's good. So that's what I would look for on Solana. 129, 119, and at best it's going to be that 108. So I'm just going to put the notes in here on that, and I'm just going to keep it with targets. Okay, so 129, 80. Let me put it right here. So 2. 119, 20. And then the third target, we'll say 108, 121. And that means this is off limits. 95.26 is off limits, so we wouldn't be looking at that, and just leave it here. And then that would do it for Solana. So I'm going to do this red. If this catches up to my typing, because I was quick that time. I was better. I was much better than before. And then just so I don't have all the noise on the chart. Okay. These are really far out. Sorry. Drag them in like that. So these would be the targets. We'll lay this on top of that. That way it doesn't get lost in the process. And I just sync those into the layout. It's a 15-minute time frame, I do believe. Hold on, let me make sure. No, this is a monthly time frame. 15. It's not generic. That's correct. So price is far off from any of those targets at the moment, but you can see how bad we are here, riding underneath this cloud here on Solana. It doesn't look like it's giving. Just wanted to see on that. Volume is it's not really there. It's there on the moves down. It is. It's definitely there on these moves down. We got large volume. As price is selling off, not really catching any good volume to the upside. So you can see how petty our volume is when we're trying to get prices up. I'm gonna switch this because I can, just to make it a little bit easier to see. I'll put it back on reset settings. So that was bullish absorption right there, unfortunately. And you can tell from the doji, and that's what that was in that case. So not really. 15-minute might have a little break. But I wouldn't count on too much. There's no volume there. Over here, you can see where the first target would be coming in at, down in here. I'll put the scoots those over a little bit more. That was it from that day. I think this was the day I posted on X. actually, because we were doing this little break right here, and then price came back up into this line and back tested it. That happened to be the high. That's up. It's a nice structure through here on the 1 hour. Um, for that continuation down, repeated bear flags. I remember when Bitcoin kept doing these repeated bear flags during the bear market, and every time that was pretty much all we just kept looking for. At that time, it was just these little bear flags every time. Yeah, impulsive, corrective, impulsive. Yeah, this is quite the sell-off. Quite the sell-off. Just indicating that there's a squeeze in here. Nothing else. Just a squeeze on this 15-minute time frame. This just keeps doing that, where it breaks and drops back into it. Could be a good way of just looking at it from this point here. So if you're breaking it and you're coming back into it, um, just continuation down. So right now, if this candle was breaking down, that would come back below that point right there, that 158.66, and continue this move down. Otherwise, maybe something more like a bounce away from here and then a continuation up. So I'm gonna leave that as such. We'll see how that looks for Soul, and then oh my gosh, yeah, and we had already just looked over and saw this was broken when I was on that higher time frame for Solana. Was this? Come on, come on, please. I'm gonna cut this stream at 8 o'clock just because my computer is acting real shady on me right now. I'm gonna post it though. I will post it. At least the Bitcoin, the Solana, and the Ethereum. Those are the three that I've covered here on stream. Just our high market cap. I'm not gonna get into BNB because yeah, we had already seen that. I started. I kicked it off with that, so we know that we broke that. Can be an easy reclaim. Apparently, I put a dot in here because I was looking for price to come down here already. This is the bear market low territory right here, which is something that I already shared with you on stream prior. That's why the details are still in here for it. So bear market lows. This is the do not want to see prices below 95. We don't want to see them below there. But our three targets, once price decides it's interested in here, I'm just going to scale this out to over here. And I actually didn't decide to look at the bear market lows again until that situation happened on the 10th. And I saw so many other coins either tap their bear market low or they surpassed it, which meant that they were complete garbage and you didn't want to touch them. You're going to notice I'm not going to talk about a whole lot of other coins too, simply because most of these new projects, even though they're doing good, they have a crap ton of lock tokens. It's not worth it. It's not worth it. That temporary joy is not worth it. And they say don't marry your bags. Find you one you can marry. Find you one you feel like this is I can marry this one. Because the ones that are just fun, I promise you, you will get hurt in the end. So I'm not dealing with them. I'm not. I'm not. And I talked about Stewie for a little while with Stewie with all of its freaking unlocks. Like it's just not, it's not worth it. But it seems that I was looking right here. So get over here, Dottie, Dottie. I should be. If not, I might already be stopped out on my meta position. Which that's my last topic right now. Yeah, that's my last topic. As I'm waiting for targets to hit what I was mentioning to you yesterday. But yeah, this is a 4. And then back over here, we can see this measure move would put it down here below the 119. But we have these 3 in here that we will be looking at for Solana. I really don't like doing that. I really don't. I'm gonna leave that just sitting in here. I know that we broke this. I'm gonna leave it sitting in here just in case anything. I mean, just see if some sort of a reaction happens in there. This isn't cutting through anything. It's not. I'm just trying to find where momentum back up could be. And if this becomes something, which I'm not leaning on it. I'd rather be more accurate. It's gonna bother me. Okay. I'll hide that for now. But we did close below this, and this came from a daily chart. So this should be price should not reclaim back inside of it. If it does, it invalidates this, and that might be strong for you. So you can look at that for Solana if you feel like this is a lot. And if something quick happens, because it doesn't have to just keep going down, right? So a reclaim back into here would be good. And if it reclaims back above the range that we got the breakdown from, then I would be looking for price to come back into this trend line right here first. If it breaks above this trend line, then I'll be looking for price to come back into here. And if it does that, then we can say, okay, we have something different that could be that could be happening with Solana. Like price action could be transforming here for Sol, but otherwise, I probably would look for a breakdown from here and then into one of these levels in here. So that's the way to play with that. Here at this low, potential SFP maybe, and it looks like exactly where we're tapping on right now. We can throw it in the mix since it does kinda, sorta, right there. Are these lines even? They almost don't look like it just because it's just this one is 4 letters and those are 4 numbers. Well, stuff like that bothers me, but it does. Ay. Okay, so we got that out of the way. We got Solana out the way. We got Ethereum out the way. We got Bitcoin out the way. We got USDT dominance. If I can just get over there to this without all of that, that would be great. But my chart reset anyway. Let me see. Against BTC total 2. USDT dominance, and then MSO versus 8, and that's 5. All right. So on the USDT dominance, I mean, that couldn't have slapped any better, I would say. I mean, this really doesn't matter at this point, but this is the next zone in here. I have highlighted for it, which is 5.61% to 5.90%. So that will be above our October 10th wick, which this was the measured move, and we captured all of that. That was a measured move on that. That happened. Yeah, we held support down here. We broken through the resistance. So this is just what I'm looking at up here, 5.61% to 5.90% target. And I mean, that's usually how it is, right? Like we danced around on that, usually moves us into the bear market, to say. Hard to say. You know, maybe this time is different. You saw me go through and posted on that twice earlier this year. I posted on it, and then midway through this year, I posted on it again, and that's usually how it works. USDT dominant comes down to its main trend line, which is this one right here, this macro trend line that has been the macro trend line forever and ever and ever. And the macro trend line through here, and that starts our bear. That's typically how it is. And you can draw this in a way to catch all the touch points. What I ended up doing was I just ended up using the first 2 and making that my base case. So I'm not, I made that my base case, but you can still do it, where you get all the touch points. And if you do it where you get all the touch points, what you're gonna notice probably is gonna be it was rejecting, trying to come back into it right there. It broke it. It was rejecting, trying to come back into it. It broke it. That's probably what you would end up seeing. I don't know. I'm just assuming that that's gonna be what shows on the chart, just by eyeballing it. But this is the next target I have lined out, which is going to be in here. We're looking for prices to get into here and stall out, and then we'll see if we can't get that additional move on Bitcoin that I'm looking at, that we were just looking at. But that was, yeah, that's where we're at. This was our pain test. It had to be. That was our pain test. That was the market testing what they can do. How far can they push the boundaries on price with us is what I have to, that's how I view that October 10th situation. How far can I go? And now they've convinced everybody. So now they can do it with ease. They scared everybody right here. They scared everybody right here. But at the time, that was all they could do. But now that they spooked you, they know they can do more now, which is why they're coming back for it. To test it again. Because they freaked everybody out. Even though that was all they could do. Because if they could have did more in that moment, it would have showed in the chart, just like it showed with some of those other coins that completely buckled under the pressure. They hit their max pain right here on Bitcoin. This is USDT dominance, but they hit their max pain on Bitcoin. In that moment, that was it. But now they freaked everybody out. Now they can get to it. Now they can do it. Now they can do it. They've convinced you I can get to you. And now you're convinced they can get to you. That's how it is. That's how it is. Just letting this slow computer right now get us back over here to Bitcoin before I go, before I Jito. Still not moving. I appreciate you for stopping by to hang out with me. I gave you what I felt like was going to be, just what I'm looking at. This is what it is. This is what I'm looking at on the chart. Bitcoin is my main focus. Solana, Ethereum, those are next, just because those are two very large altcoins, and they have a lot of institutional influence behind them. So they're important to the overall crypto market. So that was my focus today. That was my focus today. So just waiting. Just waiting. This is I suppose I could do that here too. What I did with I just don't want to put the lines and crap back in here. But that's the situation with like the situation I just showed you over there with Solana. Okay. So we're looking for the breakdown on the low of our range right here, which is simply the liquidity that sits here. And then that liquidity right here from the October 10th fiasco. that. So I don't want you to be confused about where this is coming from either. So this has nothing to do with that. Yeah, you don't have to see that. I know what I'm looking at with that. So that liquidity. We'll move this so it's not interfering with this candle. I know I have it synced in, so it's going to look different. It's going to look lost on the lower time frame. And again, the setups that I covered, which is these two right here. However you choose to do it, wherever you choose to set your stop at. If this is something that you want to entertain, not financial advice. If $100,000 is psychological level, what I would say would be the max pain. Not that it won't go lower than that. I'm just identifying it as people are going to start to get panicky. So it's going to start to test the max pain. Max pain. It's going to start to feel testy to a lot of people at that 100,000, and they've already put it in your head too. Bitcoin will never go below $100,000 ever again. That's what these analysts started saying. So it's embedded in your head now. So if it goes below that $100,000, you're panicking. Because they told you it'll never go below that $100,000. And these people have a ton of money. They know what they're talking about. So that's max pain, 100,000. So if you wanted to enter there, maybe scale into your position, add a little bit more around that 97.5. And if it goes to garbage, you have your stop loss in place. They decide to push the boundaries a little bit more, let me put it like that. Then you have your stop in place. You reassess. You're looking at it. If you're not that person who's not thinking, okay, they told me it's never going to go below $100,000. I see all this other confluence in the chart. I'm going to sit on my hands until it does what it did the last two times, which is it came into this moving average right here. It did that. It back tested in here. I'm going to wait on that. I'm going to wait for us to, I want to show some similarity. It doesn't always repeat, but it often rhymes. If you're that person, then number two. 97.5, whatever it is, something like that. That liquidity gets taken. We hit that moving average like we did before. We've already tapped into that 50% retracement level. I'm not looking forward to get down into the golden pocket. I'm a little covered for that though. I'm covered for that, but I know I'm gonna let it go. If it doesn't respect it. Love you. Well bait. That's our well bait entry. So with that said, I appreciate you for being here with me. I am down Crypto TA. I am sitting on my hands until my target is hit. I'm just going to wait for that 97.5. If it doesn't work, then it just doesn't work for me, and I'm okay with that. All right, Meta. because yeah. Meta. So yesterday I did tell you that Meta has the potential. Hold on, why is this in here? Why are you here? Oh, I was looking at something. I was just testing, looking at a back test, whatever. So we're within our range in here. I did tell you that it's a possibility that they're going to get that price down here. So we did hit, I said 600 is a target that they want to get it to with the options expiring on the 7th, right? So 600 is going to be that target. Dark pool is hinting at the 588, 586. My entry, the entry that I'll be looking at, because I did put some notes in here on this, but my stop has potential to get hit. I did come in and I updated my notes for myself in here because I took the entry right here. We got a little small bounce in here, and then you see we broke it. I was considering adding to my position here, but I'm just going to sit it out. I'm not going to add to my position. And the reason why I'm not going to add here off of this 50% retracement is because number one, we're already below it, honey. We're getting ready to stop me out as soon as this market open up at 9:30. I'm probably going to have to take more of a hit than what I have set for my stop loss down there, simply because the market is closed. So by the time the market opens up, so I'm doing it on BTCC, it'll be below my stop, and then they'll just do it then. And they offer you this little stop loss protection thing, which I'm not paying any extra money for that. Just do what you do, market, and that's fine, because it was a light entry. I was smart enough to know that. Take a light long. Not look for a whole lot, 3 to 1. All right, so I put in here, do not add. Do not add down to Crypto TA. Where before I was like, I'm gonna add on this entry. I'm gonna move my stop for a 5 to 1. I said, no. I'd be out more money. Do not add. And I didn't add because when you look at the daily time frame, which I was just over there on daily time frame, bears are so in control right now. Bears are so in control right now, but there's also this idea that we're just going down that to the my next entry, and that's going to be great. So that's going to be down here, 588, 586. What do I have in here? 586. So this do not. This 586. That's what I'll be looking at next. There's no reaction on the daily time frame. No reaction whatsoever. Nothing. So decline in volume, which is good. That's a good thing. So we weekends are getting shaken out at this point. And I hate to use the word weekends because I don't think anybody has weekends. I think you just, you know, you know what's good for you. They call you weekends. Why use the word weekend? You know your money. You know your money. You know what you're not willing to accept. And that's everybody in every situation. So yeah, I'm stopped out. Not really. When market opens, sure. Hopefully it's not below here because I really don't want to pay a little extra, but it's not a big deal. Very light long, very light risk right here. I already knew what the measure move was. I already knew that, but I wanted to test the waters in here. I wanted to test the waters. And now I wait. And I just wait for measure move. I was considering this right here. That's not going to even be a consideration. So just, this is where we're at. Position taken on the high time frame. So that is what that is. No ad. No ad. I should have updated that in here. No ad. Max Pain and Dark Pool down here, along with the measure move here, coming from Siamese twins up here. A little Siamese twin head and shoulders formation here at the top here. It doesn't right here. Now I will not be in the market per se. Once I do this again and my stop gets hit, I'm out. That's it. If my stop gets hit again, that's it. I wait. I wait from there. Not because I have a problem with jumping back in again. I don't. But there's some negative stuff in Meta's chart as well. Um, Beyond this right here, because whales don't always have control. You know that they can't convince retail money otherwise. They don't always have control. Market makers don't always get what they want if they don't have control, and market makers can lose control sometimes. Very rarely do they lose control, but it can happen. Okay, so we do have this. We have a couple of gaps in here. If you're looking at it from a daily perspective, there are a couple of gaps in here. So you have the gap that's right here. It's a great gravitational point for price to come in and want to fill this gap, which also, gives some extra confluence to this measured move. The gap in here, the whatever else I'm looking at down through here, it also gives some confluence to that. There's another gap down below. If you're looking at this daily time frame, there's a gap right here as well. It's a gap right here. This gap right here puts us down here. Now down here puts us below what? That 120. And that's not a place I want to be. Now I did go in and I noticed something kind of interesting though. So I'm using another EMA ribbon right there that I like. I reassessed in. And that's why I have the little note over here, but I'm gonna move this right here and I'm gonna rethink that. It's not in a write-up. It's not in my write-up over here for me to do that. So I just won't even entertain that. All right. But you can see how we have no wicks for here. I'm so country that it's hard for me to let me just give it a nickname, Maros. We got some Maros down here. You know, the hell is a Maro? What is she talking about? We're just gonna call it that. Short. Abbreviation. And then there's another gap that's down through here, but that's neither here nor there. I'm not looking at all of that. If it's below, you see right here 580, which the stop is below 580. My stop is below 580. My stop is what is my stop right here? No, stop isn't below 580. Okay, stop isn't below 580. But I do have below 580 cut. You can see that right here. Below 580 cut. So you're up next, buddy. You're up next. Get over here and show me what you got. Show me what you can do. Better be more than that first one. It was looking good though. It was looking juicy for a little bit there. On the lower time frames, it was kind of cute. Flash my little P&L card and then give it to the market and then some. Kind of cute. That's what it was. But that's my story. I'm sticking to it. So yeah, measured move down here, along with Max Payne, along with Golden Pocket, along with Dark Pool, along with everything that's saying right here's a lot of orders sitting right in there. 588. 588 has a lot of orders sitting in there. I'm slightly below it. 586, slightly below it. Because 586 is actually this measured target. And I did 580. 586, yeah, 586.15 is the measured target. And it's exactly from that neckline breakdown. So I did go with this one. I can't really tell you from the video right now. Can't really tell you from the video. Let's see if I got. not over here on this one, not over here for Meta. I do have the other one though, but yeah, that's Meta for me right here. Past all of this, yeah, I gotta sit down for a minute. Past all of this, and target is going to remain the same for that 720 for me. I know that there are a number of sharp analysts that are looking for higher than that. They're looking for like I think it's like 834 or something like that. They're looking for 834, just 720. Okay, just 720 for me. And if it does more than that, then hip hooray, I probably won't be in Meta anymore anyway. I just won't be. See, the only thing over here with this one too is I don't like how it is rising a little bit right here. This isn't the one that I was using beforehand, but I figured, you know what? Let's go with that one. None of the EMA ribbons over here are the same on this time frame right now, and I'm just gonna study this, how I have it mapped out. I'm gonna see how that goes. It's really not good for me to do that, but study and trade at the same time. Usually, when I'm doing that, I'll lose some money. Usually, but yeah, I changed them because they were a lot tighter. They were a lot tighter. You can see yeah, it was a lot tighter. Um, That's about the only one this is probably like the only one that didn't change. Right here, I did change those other two though. I did change these. So don't pay attention to any of these down in here. But you do have that EMA that runs up this trend line right here for Meta, and I think this was the one of the notes that I had in here from the live. So 15 million below 640. Okay, so once they lost that, yeah, once they lost that 638, 640, whatever, they're getting their wishes to get it down to here. So, like I said, 600 max pain for a lot of people start exiting, and could be very right to do so. Could be very right to be like, you know what? Meta is about to do something different, and Meta isn't looking all that. I mean, not looking all that sweet right now. It's not. It's not. It's not looking all that sweet right now. That's just the two places I want to take a chance here on Meta price action, but it's really not looking all that sweet, especially if we're not going to maintain the range zone in here. So that's what this is. Red and the orange down here is just the zone that Meta has tended to respect. And if it's not respecting that, which everything, like I said, it points down here towards this low. It points down here towards this trend line. Everything points towards this trend line. So, very important place for Meta to hold, because it all points towards this trend line. All of it. So, it could get bad if that's not working. So it's a lot of fear with that. We'll see. You don't have all the gaps that you see from the other from the daily time frame, but you can probably tell off like your wicks and stuff like that. Like you do have this one gap in here though. You can clearly see this gap right here on the weekly time frame. But let me see how long this was. Let me see, this gap was built. And how many days it's been? 100 and since 25 hours. It's beyond 3 months. It's beyond 3 months, that's for sure. See dark pool in here at 588, 592, 588, something like that. And then you saw the measure move I had there for the Siamese twin, or head and shoulder right here. That bear divs all across this top. That's the second drive. The bearish divergence. This was drive 1 on the bear div right here. This is drive 2 on the bear div right here. And then of course you just start to see price just chop, 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 chop. This was that first one right here. I'm trying to do this in such a way. Right here. Goes like that. So then you see how we got that deviation right here. Breaks down. It actually hit a key level on the 3-month time frame right here, which 3 months ago this would have been your volatility low right here. It bounced from that, creating this trend line right here, whereas beforehand it would have did something like that. And then as we start to shift a little bit, I would have changed this, maybe go from here into this one, and so on and so forth and whatnot. You can even see how when it broke down, it came back and it rejected from right in there. But yeah, break, it came back in, rejected off of that high right there, putting in this this head and shoulder Siamese twin head and shoulder formation right here. Like I said, that measure move is down here. It is down to here. And that just cut off on my screen here. I'm glad it didn't cut off on you, but it did cut off in front of my eyes. That's the situation there. So then if I were, I gotta go. I hate to, and I don't want to. It's just my computer keeps acting crazy. I can't. You can't even see I'm moving my cursor, and I'm moving it right now, but it keeps freezing. So you can see that line just stuck there, and that's because it's not letting me move. I'm gonna have to. I don't know how this happened. Have to restart, get rid of something in here running that's causing me a problem. I don't know what it is. Right now, I can't say that I know what it is. It's just stuck. Capitulation, obviously not complete, but we'll see. Because I did tell you. Let me see. So I probably would have did maybe that and that would have been, how I end up looking at it. I just use a moving average. I have to draw these things on lines, but a moving average is not made. Yeah, I mean, maybe not. Maybe not. I don't know. I like drawing these trend lines. These trend lines like me. So you can see here, like I said, this trend line is going to be very important. So it's going to be quite a lot like back over here. So like this was Meta's trend line back in here. So you have the trend line go from there, that touch, that point right there, and then here. And then you can see how it got down here towards this trend line. And then it got that first little bounce away. It came back. It tried it once again, and then it lost it right there. And you can see how the volume was at that point. So the volume at that point, it did have, you probably would have looked at this like I'm looking at this. Like, is capitulation? Oh, is it capitulation? Probably not. Probably not. And the thing is, it happened from the top. And that large spike in volume happened from the top of price action. I mean, obviously we know that's distribution. Obviously we knew Meta was coming into a point where if news didn't change the outcome, it looked like it was going to do that anyway. It was going to break down. It was already showing it, So it should not have come as too much of a surprise. Little bear flag right there, breakdown. But we had this large spike in volume back here too, off of that earnings. That large spike in volume back here too. Actually followed it up with a couple of more large volume through here as it was trying to hold through here. And then what happens is once it started to break, bear divs started coming in on it. So that's going to be the thing here for Meta this time too, with the larger volume spike that's right here. And this volume spike in here, this ended up being the capitulation right here. This did. So it could be the start of some sort of a little small bounce correction for Meta. So my 720 might not be something that gets hit. I'm targeting that 720 anyway. I know that I will take some profit, but it then started putting in the bear divs all the way down into this point. I don't know what kind of noise is about to open up on you down here, but quite a bit of noise, right? Quite a bit of noise. This was another giver right here. So you can see the head and shoulder. You can see that head and shoulder right here too on Meta. Now we are still above weakness. We're neutral right now here, and it looks like it might have been in here for starters. Let me see. Actually, let me just turn that off for a sec. Let me see. No, so that wasn't the case. It actually had broke through it here. So it actually broke into weakness with this volume. It actually broke into weakness. Just straight broke into weakness on Meta here. It started over here. Before this sell-off happened on that earnings, ribbons had already flipped on the daily. Like you had a full flip on the ribbons, depending on which ones you're using and what look back you're using on them. It was a full flip before their earnings came out, and Meta saw this sell off. But then in here, so it's already in. Please cursor move. My cursor move. Give you another video on Meta before I G. It doesn't like me at all today. At all. Oh my gosh. I just can't. If you can see this chart though, you see where the cursor is. Just look over to your left a little bit. And where the RSI is already below that red dark solid line. So it had already, it broke it during that earnings. It just went ahead and just completely flopped out on it. Okay, it's moving now. Completely flopped on it on the weekly over here. But you can see back here, it was already like you can't see on this chart right here, but on the daily, the ribbons had already flipped before their earnings even came out, just hinting at this is going to be some garbage. But if it came out good, it would have flipped it around, right? So I mean, you never know what's going to happen. But then you see Meta starts to put in these bear divs. Like anytime it starts looking like this, then chances are some bear divs will probably come into play. Like this, like it got really, really, really oversold in here. And I try to stay away from using the word oversold. It extreme weakness is what I'd rather say, because when you say oversold, people are like, oh my gosh, it's gonna go up. It has to be going up. It's oversold. There's like, so I try not to use that word, but sometimes that's all people relate to. I try to just say weakness instead to get it out of people's mind, to think of this as long places and short places, because you can see how price will keep going. It would just keep going. So I try not to do that. But you see the bear divs in here. Anytime it gets extended like that, when the RSI starts trying to move up, it's going to move up. It's going to put in bear divs first. It's going to put in bear divs before it gets a chance to play out. Bullish divergence is usually what's going to happen. And then finally, that final on that bull div comes in right here. Because you get caught up looking at this part of the bull div down here, bull div down here, bull div down here, and then it doesn't work. So that's a good place to also drop a trend line on it too. When you're seeing the bear divs, just drop a trend line. Just I'm gonna stretch this out so it doesn't get, the magnet doesn't start grabbing it. And then you see those bear div, bear div, bear div, bear divs. That could happen here, and that's the only, that's why I'm out. If it takes out my second, when I get my new entry, hopefully I get my new entry, everything points towards that area. I'm gonna take that long there, set my stop. If I take another L, I take another L, so be it. But that's my second attempt here at Meta, and if it breaks this trend line, it might be a repeat. It might be a repeat at 2022 going into 2023, and I don't want to be in it for that. I don't want to be in it for that. But so far, earnings came in. We got the sell off. We're still holding in neutral right now, 40.89. We'll see what that looks like throughout the day. If we're going to start breaking below that, what happens, right here. I know the first thing my eyes are probably going to say, oh, bull div, based on this low right here, if this RSI starts to drop through here. But if RSI starts getting real oversold, okay, yeah, I'm just going to say the word. If the RSI starts to look extremely oversold, expect some more bleed out on Meta. If it stays looking like it does now, where it just, reclaim, maybe the bounce is not as strong as I want it to be to 720, but I will be taking some profit on it. I will be taking some profit on it, especially if I can see Meta coming back up and tapping into these lows in here from what we got to break down. See it coming back up and tapping into that. But I would be a little cautious with it. I have the setups that I've shared. That's what I'm doing. My one attempt looks like when the market opens, I'll be stopped out on that one. Sit on my hands. I'm waiting for 586. Dark pool 588. Tons of orders sitting there at 588. Anything can change. People can change their mind. You know what? I'm not taking that long there. I'm not doing it. But 588, ton of orders sitting there. I'm gonna be looking at that. I'm gonna be in that. I'm gonna grab some of that and see if it works out. But you can see this big squeeze in here, topping signals in here. Yeah, so breakdown, no actual surprise there. Big squeeze in here, ribbons were already flipping in here. Already flipping prior to coming into this, but huge squeeze in here on Meta. And it's had quite a few squeezes throughout, but none of them really panned out too good. Except when it really got hit with some bear divs. Really got hit with some bear divs. Like this one. That was the first bear div that I could tell. I'm not counting this right here. It's probably some sort of a squeeze breakout to the upside in here too. I don't know. I haven't looked at Bollinger on it, but it was probably some squeeze breakout in here. It does have that squeeze up here at this top. That's why I'm not turning them on. It may not play out on that squeeze either. That did kind of freak me out a little bit, just looking at it, just a little bit. But that's the difference between this point right here, where Meta, like you could say, if you're just looking at it, you'd be like bear div, right in here, and technically it was at the moment, but then it put in the bull div because of, look at the extremity. That was the extremity. Like it gets really extreme when the RSI gets up into these high places. What most of us would consider to be overbought, when it comes back in from those zones, like up here in 80s, up here in 90s, when it come back in from that, you're gonna see bull divs, and that's gonna keep the price going up. Bull div keeps the price going up. And that's a good way to train your mind of thinking about, like, what was my RSI? So before I start thinking bear div, I need to think about how extreme my RSI was coming into the move down. Because if my RSI was extreme coming into my move down, then likely I'm going to pick up bullish divergence and continue this move to the upside. Bull div. I'm going to continue that move to the upside until my RSI can't hit those extremes again. Until it cannot hit this extreme again. So I'm making this high, but my RSI at this point can't repeat what it did before. It went beyond it over here. It can't repeat what it did before. So now I can look at this and say, likely I'm going to get slaughtered. It can't repeat what it did before, but it didn't even get to a place right here. It didn't even get to overbought this time. Period. Before this earnings with the head and shoulders at the top, it didn't even get to overbought. Period. Telltale right there. That was the telltale right there. So yeah, this is my last chance at it, and I leave it alone. I'll leave it alone in case it wants to just, really roll over. So there's some things that concern me with the fact that it might be able to do that. Which I would be looking at the lower 400s, not below 400, but maybe like 425, 420, 424, or something like that. I would be looking for something like that at that point, really. And then I know your next concern would probably be, well, that's below this point right here. It's something going on right now, and then I don't know how to explain it. If that happens, it's just something going on right now. It really is. I don't know if it's AI as a whole, what it is, something in the background none of us can see. All we can do is assume, just, but it doesn't look, it has some concerns, some from Meta that I don't like. But we'll see how we hold up above above 40 with this huge spike in volume, and we're still above the 40. But we're coming into this, so the RSI definitely is going to start moving. Definitely going to start moving, but it's just a huge mass of orders sitting at 588. A huge mass, 588, 585, whatever. That's my entry. It's a huge mass of orders sitting there. I'm gonna jump in on the bubble and see if I rise to the top if it pops. But that's all I got for you. It's frozen on me again. I probably won't be able to close out the stream, but you hear my voice. I really appreciate you for joining me today. We looked at what we looked at on Bitcoin. Right now, it is holding that little last zone that we looked at, but I'm not touching it again until we get down there to around that 97.5, something like that. I'll assess it at one at 100,000. May not be today, could be today. I'm out of the crypto market for now until we do hit that target. It just seems inevitable that it happens. Everything points to it. It seems inevitable on Meta that it hits, down here too, because everything points to it. Everything is pointing to it right here. So see what happens. But I will keep you up to date. Tomorrow is Wednesday, right? I usually don't stream on Wednesday. I might just make it about stocks tomorrow if I do decide to get on. I'm not gonna do crypto unless Bitcoin is down there and we got something to talk about. I'm gonna post your notes on it. Is what I'm looking at, what a trading plan could be. None of it's financial advice, of course. Let's see how things go from there. Appreciate you, and I love you. Have a great one.